Appendix A provides an overview of the process costing system using a weighted average method. We saw in the chapter that some companies use job order costing to determine the cost of their custom goods and services. In contrast, Shell Oil, Crayola, and Sony use a series of steps called processes to make large quantities of similar products. These are called process costing systems. There are two methods for handling process costing: weighted average and FIFO. We focus on the weighted average method in this appendix. Remember, with job order costing, cost information is collected by job. When a job is complete, all costs are added on the job cost record. Managers can determine the cost of the job and producing each unit. In process costing, all units go through the same production process and therefore have the same unit cost. Each process requires the use of separate work-in-process inventory account. The costs are collected by process or department. Materials, labor, and overhead can be incurred in any department. The costs accumulate until all costs have been added to the product and it is sent to finished goods. Each process, mixing, molding, and packaging, is a separate department, and each department has its own work-in-process inventory account. Direct materials, direct labor, and manufacturing overhead are assigned to work-in-process inventory for each process that uses them. When the mixing department's process is complete, the wax moves out of the mixing department and into the molding department. The mixing department's cost is also transferred out of work-in-process inventory, mixing into work-in-process inventory molding. When the molding department's process is complete, the finished crayons move from the molding department into the packaging department. The cost of the crayons flow out of work-in-process inventory, molding, into work-in-process inventory, packaging. When the production is complete, the boxes of crayons go into finished goods storage. The combined costs from all departments then flow into finished goods inventory, but only from the work-in-process inventory account of the last manufacturing process. For Crayola, packaging is the last department. We use two building blocks for process costing: conversion costs and equivalent units of production. Many companies are highly automated, so direct labor is a small part of total manufacturing costs. Such companies use only two categories: direct materials and conversion costs, direct labor plus manufacturing overhead. Combining direct labor and manufacturing overhead into a single category simplifies the accounting. We call this category conversion costs because it is the cost, direct labor plus manufacturing overhead, to convert raw materials into finished products. The concept of equivalent units allows us to measure the amount of work done on a partially finished group of units during a period and to express it in terms of fully complete units of output. That is, number of partially completed units times percentage of process completed equals. We use this formula when costs are incurred evenly throughout production. This is usually true for conversion costs. Direct materials, however, are often added at a specific point in the process. For example, wax is added at the beginning of the production in the mixing department, and packaging materials are added at the end in the packaging department. How many equivalent units of wax, conversion costs, and packaging materials are in ending work in process inventory of 10,000 crayons. The 10,000 crayons in ending work in process inventory have 100% of their wax because wax was added at the very beginning. So they have 10,000 equivalent units of wax. None of their boxes, because that is the very last thing that happens in the packaging department. So they have 0 equivalent units of packaging materials. The crayons have not yet been packaged. 8,000 equivalent units of conversion costs that we completed earlier. There are 4 steps in the process costing. Number 1, summarize the flow of physical units. Number 2, compute the output of equivalent units. Number 3, compute the cost per equivalent unit. And number 4, assign cost to units completed and units in ending inventory. To provide an example of process costing, the data shown here will be used. The company had no beginning inventory. Materials are added at the beginning of the process, and conversion costs are added evenly throughout the process. During the period, 50,000 units were started, and costs were incurred as shown here. Of the 50,000 units started, 40,000 were transferred to the next department. 10,000 remained in process. The first 2 steps involve determining the number of units worked on during the period and where they are in the production cycle. Number 1, units to account for. Include the number of units still in process at the beginning of the period plus the number of units started. In this example, there were no units in the beginning work in process and 50,000 units started. Number 2, units accounted for. Shows what happened to the units in process during the period. Of the 50,000 units started, 40,000 were completed and transferred out to the next department. The remaining 10,000 are only partially completed. In this example, materials are added at the beginning of the process, so the ending work in process is 100% complete as to materials. There were no materials to add to these units. However, for conversion costs, the goods are 25% complete. Therefore, for ending inventory, we multiply the 10,000 units by 25%. The equivalent units for Department 1 are 50,000 for materials and 42,500 for conversion costs. Step 3 is to compute the equivalent cost per unit. The cost of direct materials is divided by the equivalent units. The result is $2.80 of materials cost per equivalent unit. For conversion costs, the direct labor and overhead costs are added together and divided by the 42,500 equivalent units for the conversion cost. The last step is to assign the period's cost to the units. For the 40,000 units transferred out, we multiply them by both the materials and labor cost per unit. 176,000 will be transferred to the next department. The ending inventory needs to be split between materials and conversion. The materials cost uses the 10,000 equivalent units multiplied by the materials unit cost. For conversion, we use 2,500 equivalent units multiplied by $1.60. Ending inventory totals 32,000. The journal entry to record the transferred out cost to the next department involves a shift from the work in process of one department to the next. The amount is taken from the previous schedule. Notice how the ending balance in the work in process Department 1T, the T account is the same, $32,000, that is shown on the process costing schedule as total cost of ending inventory. Process costing accumulates costs as the product moves through production. Costs are assigned to the units, such as gallons of gas or numbers of crayons, as they pass through that process. The difference between job order costing and process costing lies in the way costs are accumulated. Job order costing uses a job cost sheet, and process costing uses a production cost report. A job order costing system accumulates costs for each individual batch or job. Process costing accumulates costs for each individual process needed to complete the product. Direct materials and direct labor associated with a specific job are tracked to a job costing record based on a job number. When direct material costs are incurred for a job, work in process inventory is debited and materials inventory is credited. When direct labor costs are incurred on a job, work in process inventory is debited and wages payable is credited. Indirect materials and indirect labor utilized are debited to the manufacturing overhead account to be allocated to jobs later. Manufacturing overhead is allocated to jobs based on a predetermined manufacturing overhead rate. The rate should be based on the main cost driver, that is, the item that drives manufacturing overhead costs up or down. Once the predetermined manufacturing overhead rate is determined, manufacturing overhead is allocated or assigned to jobs based on this rate. At the end of the period, the balance in manufacturing overhead will be the difference between actual costs, debits, and cost allocated to jobs, credits. The total actual manufacturing overhead costs, debits, rarely equal the total manufacturing overhead costs allocated to jobs, credits. At the end of the period, we must adjust the underallocated or overallocated manufacturing overhead account balance. Closing the manufacturing overhead account means zeroing it out. The balance is closed out to cost of goods sold. Service firms must also allocate overhead to jobs to determine each job's real cost. Just like with manufacturing firms, a predetermined indirect cost allocation rate must be determined. The rate is then used to allocate overhead costs to service jobs. As we saw earlier in this chapter, accountants prepare cost reports to help production managers evaluate the efficiency of their manufacturing operations. Both job order and process costing are similar in that they accumulate costs as the product moves through production and assign costs to the units, such as gallons of gas or numbers of crayons, passing through that process. The difference between job order costing and process costing lies in the way costs are accumulated. Job order costing uses a job cost sheet, and process costing uses a production cost report.